Hello everyone, welcome to this presentation on Goods and Services Tax. I am Natarajan. I am a student of PGPBM at IIM Trichy, and this video is being made as a partial fulfillment of the course on Indian Economics and Policy. Before we go into the presentation, we will see what we are going to cover in this presentation. First, we will see what is GST, then the need for it, then the structure of GST or the rates of GST in India, and what are the benefits of GST. What is GST? GST is an indirect tax which was introduced in India on 1st of July, and it was applicable throughout India, which replaced multiple cascading taxes levied by central and the state governments. It was introduced as an amendment of the Constitution, and it was 101st amendment of the Constitution. And what is an indirect tax? There are two types of taxes. One is a direct tax and other is an indirect tax. Direct tax is a tax which a person pays directly to the government by himself or herself. The example is an income tax. Indirect tax is a tax which is levied on the services rendered or the goods produced and is being collected by a person who renders the service or produces the good or sells the product, and is from the person who is buying the product or hiring the service or utilizing the service and is deposited to the government. This is called as an indirect tax, and GST is an indirect tax. It is applicable throughout India except for the state of Jammu and Kashmir, where the state GST will be prevailing. We will see in a nutshell what GST is. GST, as it was already mentioned, is an indirect tax. It's a tax on goods and services that are being goods produced in the country or services being rendered, or you can say it is just a value added tax. Earlier system was a sales based tax. Now the GST is a direct destination based consumption tax, and GST is levied on supply, which is called as a taxable event, and the broad term supply includes manufacture, sales, service, etc. And it replaces lot of taxes that were prevailing earlier, and it is a single tax on goods and services. For example, restaurant. In a restaurant, earlier there were value added tax on goods and service tax also, but now both have been replaced by GST. Same is in case of work contracts. They were both VAT as well as service taxes. Now they have been replaced by GST. We saw GST is a tax on supply, and supply includes manufacture, services and sales. There are two types of supplies that are possible. One is intrastate supply and other is interstate supply. By intrastate supply we mean supply within the state, and by interstate supply we mean supply across the states or supply across state and union territory or between union territories. In intrastate supply, the GST consists of two parts. One is the central GST and other is the state GST. But it is the administration is being done by the state government in case of intrastate supply. The taxes are being collected by the GST is being collected by the state government, and a portion of it is sent to the central government. And in intrastate supply, there is only one GST. It is called the integrated GST. This administration of this GST is done by central government, and GST is levied both by state government and central governments concurrently. Why is GST needed? We saw GST is an indirect tax, and before implementation of GST, indirect taxes were being collected by both central governments and state governments. We will see in brief what are the different indirect taxes that were collected by the central and the state government before GST. Central government, there was excise duty for manufacturing, service tax on services rendered, customs duty on import, and the state government it imposed value added taxes, entertainment taxes for any entertainment like cinema halls, etc., luxury tax for stay in hotels, and octroi tax was imposed by municipalities of the respective state governments. Now, there were lot of other indirect taxes that were imposed by state and the central governments. For example, there was a state excise on liquor, and there was a sales tax also, and there are property related taxes, and electricity duty, electricity tax, etc., and the tax system became too complicated. What happened is that not only was there a cascading of taxes, the tax system also became complicated, and there were too many authorities for the taxes and too many assessments, and filing of returns with different authorities was required because there were too many authorities. So GST was brought in to remove both cascading of taxes as well as to remove multiple authorities, though cascading has not been done away with absolutely. GST has tried to do away with majority of cascading effects of taxes, though there are some areas still where cascading of taxes still takes place. As far as GST is in India is concerned, there are 4 slabs ranging from 5% to 28%. The normal rates are 5%, 12%, 18%, and 28%. Most importantly, food and grains are taxed at 0%, and commonly used items will be taxed at 5%, and the standard rates will be 12% and 18%, and the GST on luxury items will be 28%. There are certain items for which GST has not been imposed. They include petroleum products, then they include stamp duty, electricity duty, tobacco products, and property taxes. We saw what is GST. Now we will see what are the benefits of implementing GST in India. The first and the important benefit is that it is a replacement of all major indirect taxes levied by central and the state government. It helps to remove cascading effect of taxes, that is tax on tax. To remove this, the person who is, for example, if I am manufacturing some items of plastic and I am buying plastic from somebody who is selling the plastic at rate of rupees 100, and let us assume that for simple calculations the GST, the tax rate is 10%. So I pay him a sum of 110 rupees inclusive of the tax, and let us assume that I add value worth 100 rupees and I sell it in the market at 200 rupees. Though I should be paying only 10%, that is 220 rupees, that is tax of 10% on the 200 rupees. Actually, I will be paying around 221 rupees because already there was 10% tax on the plastic that was supplied to me. So I had paid 110 and I will be paying a tax of 10% over the 110 rupees, which becomes 221 rupees. It becomes taxing on tax. It becomes tax on another tax. So to avoid this, the tax means in GST, a provision has been made to rebate the tax which has already been paid. To do that, the person has to produce the necessary bills, and this makes system of invoicing very, very stringent, and this is necessary for claiming of any benefits, and this will help to reduce black money flow. Another major advantage is it creates one market across India, and there is one country, one tax. That is the basis on which GST has been levied, and it also helps in faster movement of goods because across the state borders the sales tax department personnel used to have check depots, which have now been abolished, and this has ensured faster movements of goods, and it has speeded up the movements of goods to a great extent, and it also helps in ease of doing business in India. This was in very brief about GST and its benefits. Thank you. Thanks for watching. Hope this helped you to understand in brief about GST. Thank you once again.